We've had joining us in the studio Dr. Muda Yusuf, the Chief Executive Officer of Center for the Promotion of Private Enterprise. Thank you so much, Dr. Yusuf.
Thank you, Amy.
And of course, we've had Dr. Josh Bamfo with us. So it's still an aggressive hike. Still an aggressive. Dr. Yusuf, were you expecting anything less?
Well, I was expecting some sensitivity on the part of the central bank to the plight and the conditions of those who are in the real economy. Because when we talk about this economy, there are two broad categories. You have those who are investing in the real economy, who are core entrepreneurs, who are indebted to the banks, and who already are paying heavily in terms of interest rates on the money that they have taken from the banks, in addition to other pressures that they are facing. We have the second category of investors who are investing in financial instruments, treasury bills, bonds, fixed income, and all of that. For the second category, this may be good news because interest rate on all those instruments will be going up. But for the first category, which are more critical for me, this is not good news at all. This is not an investor-friendly outcome as far as the MPC outcome is concerned. Because interest rate is already extremely very high. You know, interest rate now for SMEs is getting close to 30% or more. And it may get higher with this outcome. Prime lending rate is already well over 20%. And if you are saying that you want an economy to prosper, to grow, to create jobs, I don't think this is the way to go. More so when, if you look at all the key variables that are driving inflation, you can't trace it strictly to what the CBN governor has said. Even the little deceleration that you saw, it's not so much the outcome of what the CBN is doing.
Yeah, I was going to ask.
The main victims of this are these people that have...
I was going to ask Dr. Yusuf, because obviously the MPC seems to believe that the deceleration that we saw in December is because of the aggressive rates that, you know, was carried out almost all through 2022. Can you connect both of them, or do you think it's...
Certainly not. And in any case, even in the inflation report, on month-on-month basis, there was an increase. And even the CBN governor said it because of the spending during the festive periods and so on and so forth. So this is going to put a whole lot of pressure, because if you look at it critically, if you create the right kind of financial environment for those who are in the real economy, they can grow output. Irrespective of what is happening to others, if output increases, inflation can decelerate. In addition to all these other, you know, benefits of job creation, stabilizing the system and all of that. But this is not taking all of that into account. So I'm worried about this continuous tightening, because already, if you look at even our rates, they are one of the highest that you have in the world. Our CRR in particular.
Our inflation is also high at over 21%.
Yeah, inflation is high at 21%. Of course, we have worse situations. But what I'm saying is that the fact that inflation is high does not mean that you should continue to tighten monetary policy. To this extent, even the IMF and the World Bank, they were cautioning central banks around the world about the need for them to moderate this aggressive monetary policy.
So, Dr. Yusuf, how do you see the central bank or the MPC finding a balance? You did say this, of course, will make the financial investors happy, but the real economy guys are at loss, or they're losing at this time. How do you, or where do you see a balance?
No, the balance cannot come within the monetary policy space. For me, what I was expecting was for the CBN to hold, because the level of these rates are already extremely high. Imagine an economy where out of 100 million deposits that you have, 100 million deposit that you have, you are sterilizing 32.5 million with the Central Bank of Nigeria. So what is left for you to do business? And you need the banking system to support the economy. That's what you call financial intermediation. The main purpose of a bank is financial intermediation. To move funds from the surplus end of the economy to the deficit end of the economy. That role is fading away. That is why if you look at the books of the banks, most of their income is coming from all these fees, charges, FX, and all of that. That is where the bulk of the money is coming from. So this policy stance and approach and trajectory is strangulating the real sector of the economy. So especially if you take into account all those other headwinds that these businesses have been facing. This is also going to negatively impact on the stock market. This is where the real economic players are. How many jobs will you create by people investing in treasury bills or buying government bonds? How many jobs will come from that?
Well, let's go to Dr. Bamfo now. Dr. Bamfo, as usual, we did hear the central bank governor reel out the interventions for both SMEs, the health sector, the 100 for 100 policy. Aren't these interventions supposed to kind of buffer some of those impacts that Dr. Yusuf just talked about?
Yeah, I mean, before I answer that question, let me go back to, the policy direction based on the changes that they've made. In my view, I was expecting a slight increase in the monetary policy rate. I was expecting 50 basis point increase. And based on the fact that if you look at the analysis that both analysts came up with in terms of the tapering of the inflation rate for December as against November, there was this argument that there could be the base effect, which I talked about, which doesn't mean that we've gotten out of the woods in terms of inflationary problems. And also the fact that there was some kind of marginal appreciation of the Naira comparing November when we had the Naira going around 807 Naira to a dollar, to around 745 during the Christmas period. That kind of tapered off the imported inflation and all that. So in my view, and considering that there's going to be elections, in
just
February,
about a month.
Exactly, and there's expectation of injection of more funds into circulation that can lead to excess demand for goods and services and then put upward pressure on it. I felt like there was a need for them to increase it a little bit. But I didn't expect it was going to be 100 basis points. So I kind of share the sentiments of Dr. Yusuf in the sense that anytime you are fighting inflation, there are two evils in macroeconomics that economists fight, all right? You're either dealing with inflation, which is the cost of living going up and eroding purchasing power, or you're dealing with standard of living, which can actually improve if the economy expands and people have jobs and all that. But it's been shown that it's very difficult to rein in inflation, and that's the reason why most central banks focus on inflation targeting, all right? So my expectation was consistent with theirs, that look, we are not out of the woods yet. However, I also agree in the sentiments that you don't want to be too aggressive in the tightening process, because then you dig a bigger hole such that once you rein it in, it becomes more difficult to let it come in.
You think 100 basis points is too tight?
I think it's on the high side. I think it should have been 50 basis points from 16.5 to 17%, not 17.5. But if you look at the voting pattern, you had about 5, members voting for even more than 100 basis points, which means that by and large, they thought that inflation was still a problem, especially if you think about what is going on in terms of election coming and all that. But I do agree that, the Central Bank of Nigeria has had additional responsibilities where, due to disbursement of some funds to targeted sectors, they are trying to actually mitigate some of the adverse impacts of some of their policies. The question is, have they been very successful? So when you look at the allocations, there was some significant amount that went to manufacturing. But if you look at the Q3 results of 2022, there was actually a contraction in the performance of the manufacturing sector. So you need to have a holistic approach to it. It's interesting that they didn't talk about foreign exchange and exchange rate. I think it's very critical, because we cannot be focused so much on inflation and not talk about the significant gap between the official rate and the power market, which leads to this disbursement of forex to some companies that is not very transparent, and that has led to a lot of uproars. So I think that has to be addressed, because if you don't do that and do all these disbursements, and I'm a manufacturer and I'm importing plant and equipment outside, and I have to actually get most of my forex from the power market at a huge cost, that is going to contract my business. You understand me? So I don't think that there was a holistic representation of how they are trying to support these sectors because some of the results do not commensurate with the fact that I've assisted the sector, but they're actually contracting. What is actually leading to that contraction? And I think that's something that I would have expected those over there to ask those questions that, look, how come after all this injection of funds to these targeted sectors, even the agriculture sector, which is one of the most robust, it never contracts, has not been growing at the rate that we would expect it to grow, given the amount of investments that we've made in terms of central bank making a lot of allocations. So we need to look at some of those things.
This is one sensitive point.
Yes, the point he made is very, very crucial. You know, the food and beverage sector used to be like the flagship of our manufacturing sector. Given the fact that when you talk about backward integration, they seem to be doing very well. And they seem to be less vulnerable to some of these other shocks, particularly exchange rate shocks. For the first time in a long time, the food and beverage sector contracted in Q3. And just as he said, manufacturing as a whole also contracted. So if you have that scenario, and you feel that the way to help them is to increase interest rates, I think that is a contradiction in terms. So the perspective of monetary policy is too narrow. That is my own concern. Perhaps in these meetings, we should be having some either fiscal authorities or some real sector players there. Because it's not balanced. The CBN is coming with the mindset as if monetary policy instruments is the one that can solve all the problems. He mentioned the issue of exchange rate. It's a very critical factor, which is a policy-inflicted problem. That is not being addressed. And it's very fundamental to this inflation we are talking about. The ways and means that the CBN governor is trying to justify is also a very big factor. The whole idea of tightening is not to squeeze liquidity. If you are squeezing the banks on one hand and you are injecting through ways and means on the other hand, what will you achieve?
You know, I was thinking about that when the CBN governor said, because it's supposed to be 5% of the previous year's earnings or so.
No. The way he even sounded, it was as if the CBN Act didn't even matter. And we're a nation governed by law. If there is a need to vary that, we can vary that. Yes, you can be nationalistic. CBN is the lender of last resort and so on. That is right. But must we go that far? Cumulatively, we are talking of almost 23 trillion, which was not appropriated for. That is what is generating controversy now in the National Assembly. How do you justify that? No, these are very fundamental issues. Yes, it's good to support the government, but we should do everything within the law, no matter how patriotic you are, no matter how well-meaning.
Because some of these actions have some impact.
It has serious inflationary impact. It has serious inflation. If you didn't have that kind of ways and means, our inflation situation will not be this bad. Coupled with the dysfunctional foreign exchange policy. These are factors that are emanating also from the Central Bank of Nigeria. So we need to engage the Central Bank properly. I don't think within the system that engagement can happen.
All right, Dr.
And I heard the CBN also saying that the money outside the system, they need to rein in it so that they can be able to have more effective monetary policy. What is the connection? And that currency has grown between 2015 to 2022. Has the economy not grown? In 2015, the economy was probably maybe 100 trillion. Today, the economy is 200 trillion. The cash you need to service a 100 trillion economy is far less than the cash you need to service a 200 trillion economy. And this total cash as a function, as a percentage of money supply, is just about 5%. Is it not money supply that determines monetary policy or its effectiveness? I don't understand. 95% of money is still within the banking system. I don't know what all this all this issue about too much cash in the system, outside the system, I don't know what it's all about.
All right, Dr. Bamford, let's also look at another perspective. You mentioned the issue of FX and, of course, the issue of inflation. But it seems these factors are not peculiar to Nigeria. If you look around a lot of African countries, we do have the issue of debt servicing. We have the issue of inflation. We even have the shortage of the foreign exchange, which is also causing, some kind of disruption in economic activities. Do we say it's an African problem? Or is there something that Africa is not doing right?
All right, so I think there are a number of factors that are, hitting us, or I wouldn't call crisis yet, that are hitting a number of emerging economies and African economies almost around the same time. And in part because of the state of the economies before the two major current shocks, external shocks that we've all, been hit with. The first being the COVID-19, and the second being the Ukraine-Russian war that has caused significant global supply chain disruptions and therefore can lead to imported inflation. So clearly, if your economy wasn't in a very good shape, the fundamentals weren't great, then you're going to be exposed. And one of such economies is my home country, Ghana, which has been totally exposed. Well, prior to COVID-19, it was one of the best performing African economies because it was growing on the average for about 7% economic growth rate from 2017 through to 2019. But where you have a situation whereby most of your infrastructure development are done by borrowing, all right, and you've accumulated significant debt and you don't have a large economy, then you can be exposed. Now, a number of these independent credit rating agencies, all right, look at debt to GDP ratio as a measure of your capacity to borrow. So if your debt to GDP ratio is above the prohibitive 70%, you're already red flagged and you might be downgraded, which makes the cost of borrowing from the international capital market more expensive. And if you continue to borrow, then your interest payments are going to go up. So you are virtually going to be in a debt trap, and at some point you would not be sustainable. And we are seeing a number of African countries being flagged for that. We've seen Zambia go through it, we've seen Chad, we've seen Ethiopia, you've seen Ghana. Now, a few African countries have been, warned by IMF that they could be on track to face something similar, and Nigeria is inclusive. Now, when you look at Nigeria's debt to GDP ratio, because it's a large economy, debt to GDP ratio is below 40%. But if you look at your ability to finance your debt, which is your revenue using to pay your interest payments, that is almost 80-90% of your tax revenue. That is not sustainable. So we really need to be mindful of how we spend, on these infrastructure and developmental projects. They are necessary projects that we need for growth. However, how we spend on them is very important. There should be proper value for money analysis. We should be thinking creatively about public sector and private sector, partnership in order to come up with infrastructure that can pay for itself over time. If we are not creative, all that happens is that politicians make promises. The majority of us will assess them based on tangible things that we see, and nobody really asks the question, how much did it cost us to actually put this nice edifice and whether it's going to be able to pay for itself? We don't ask those insightful questions. Oh, he built this airport and we're all hailing him. Meanwhile, it's maybe 4 times the cost of what it should have been. And those are some of the problems that African economies are facing. And it's coming back to haunt them because of these exogenous factors that have hit us, which is COVID-19, Ukraine war, and what is going on in China, which is a major trading partner for a number of African countries. This lingering COVID effect means that a lot of businesses that used to thrive are no longer,
What's the way out?
The way out is for us to have a sense of self-sustainability. I think we sometimes can...
As a continent?
As a continent, as a people. Because if I take the Ghana situation, they had cancellation of their debt in 2006 through the HIPC, Highly Indebted Poor Country program. IMF canceled a lot of their debt. Debt to GDP went down to about 21% in 2006. Now, less than 2 decades, we've gone back to IMF. Debt to GDP is almost around 100%, 90%. So once you get that leverage, that fiscal space, we go to town borrowing, all right, again, and the problem...
Must we borrow?
I think if
I know even the United States is
everybody
owing.
borrows.
I know, but I mean,
it's how do you borrow? I mean, it's like business. You can ask yourself that why should businesses borrow? Businesses borrow because they believe that it's investment and they're going to get returns that allow them to pay off that loan, and then they become profitable. So if we have that mindset of a business that, look, yes, we might have a need to borrow, but we're borrowing and investing in areas that is going to generate enough returns for us to be able to pay off and still make some additional returns from it. That should be the mindset. But we don't borrow with the idea, oh, if I can put up a number of structures, I'm going to win the next election. That's short-termism, and that creates problems in the long run.
And really, when you look at even the structure of the budgets, because a lot of this borrowing goes into the budget, and you look at the structure of the budget critically, at the end of the day, you see that we are spending close to 80% on recurrent expenditure. The amount we actually spend on capital expenditure, sometimes it's not up to 10%. Because it is not the entire capital expenditure that's even infrastructure. So the amount that actually goes to infrastructure, which can help to build capacity of the economy to be more productive, is sometimes just below 10%. So you will see some of these inadequacies even from the structure of fiscal operations. The current expenditure has been growing massively. Just as the CBN was talking about 2015, our debt in 2015 was just about 12.6 trillion in Nigeria. Today we are talking about 77 trillion. By the time you factor in the ways and means that they want to securitize.
How do we reduce that recurrent expenditure?
No, it's to ensure that you have some reforms. People have been talking about reforms, but some politicians have been talking about it. But you need the political will to push through some reforms.
What kind of reforms, actually, from your perspective?
Reforms, for instance, we start with your oil and gas sector. That sector has the potential to provide a lot of cushion, both in terms of revenue and in terms of foreign exchange. But it's not properly governed. It's being managed largely by bureaucrats.
The PIA won't do that?
But so far, it's still managed by bureaucrats and politicians. And the whole idea of the PIA is to try and decouple the sector from bureaucrats and from politicians, so that you can have a more professionally managed institution. That is what they are trying to do with NMPC. But you have not been able to do it properly, because it's still like a new wine in old bottle, or what do you say?
Will the subsidy, removal of the subsidy?
No, subsidy is part of the reforms.
Removal of the subsidy, what do you think it should do to the bigger picture? Because at least it's going to reduce some of those...
No, it's going to reduce the fiscal pressures. Mm-hmm. Because if you are spending almost 6 trillion in subsidy, if you're able to take it out, that will reduce your deficit. It will reduce the need to borrow. If you're able to also take it out, it will improve investment in that sector. Because the subsidy removal is not just about the savings. It's not just about the corruption. It's also about the investment. There is no investment in the sector by the private sector. No private refineries for how many years that you have been in oil business? For almost 50 years.
All right, Dr. Yusuf, we're almost out of time. Just one sentence.
And the currency, please, we need to mention it. What the CBN governor is saying is not realistic. And it is important that the president is getting the right kind of feedback. This insistence on this 31st January deadline is not feasible.
Well, he did say, I mean, directors are out there now to enlighten.
All those things are just camera things, people show up on camera and so on. The president should be properly advised. The National Assembly cannot be wrong. The House of Representatives have prevailed on the CBN governor. The Senate has done so. The governors have done so. Are we saying all of them are wrong? These are representatives of the people. He cannot know better than these people.
But why do you think the governor is insisting? Are there some consequences if the deadline were to be extended?
I don't, from where I sit, except it's political. That's the only thing I can see. Maybe they feel that this is a way to get at those who are buying votes and all of that. But at what cost? Must you subject millions of Nigerians to this kind of disruption and dislocations? Just because you want to target some vote buyers or something? I don't think it's worth it. Other agencies of government should do their job. The CBN cannot do everything. So the consequences for the economy, the consequence for rural economy, for the informal sector, will be extremely negative. So there is nothing so sacrosanct about it. In Europe, in UK, recently, there was a change of currency from paper note to polymer notes for £50 and £20. They did it over 2 years. Over 2 years. Now, with a population of 200 million people with very weak infrastructure, you want to do this under 2 months? And he's talking about sensitization just last week, when we have just 1 week to go. Asking people to come and look at a video. I don't think that is the way to go.
All right. Well, I was going to say, I mean, so that we don't sound too far. Let's look at the households in just one sentence, please, each, because we're almost out of time.
Yes.
With this 100 basis point hike of the rate, what does it mean to the households?
No, it means more inflation. The pressure on inflation, for me, it means that the pressure on costs will increase. Because if I'm a manufacturer or an investor, many of them are indebted to the banks. I have to factor this into my cost. That is what it means. So from an investor entrepreneur point of view, this is making life more difficult for the SMEs, making life more difficult for many of them that are creating jobs. And it's going to put pressure on their operating costs and production costs.
Dr. Bamford, there must be some good out of this.
For me, I look at it from the perspective that it's a tough pill to swallow, in the sense that we believe strongly that you need contractionary monetary policy to rein in inflation. And if they are successful, even though it's more difficult now because the source of inflation is not only excess demand, there's also the energy cost and cost of production going up. And this type of monetary policy doesn't solve the cost side of issues, but it helps and it signals what they are trying to achieve. If they're able to rein in inflation and it starts going down, then the purchasing power of the average individual in the household sector improves because it's going down. Then they can then change, divert their attention to growing the economy, and then some of the issues that Dr. Yusuf is concerned about, they can then refocus on it. But I think it's imperative that they rein in the inflation rate. And in that process, they might have to make some tough decisions, even though I think it was a little bit aggressive, 100 basis points hike. But hopefully it works, and then we can then refocus our attention to growing the economy, which is extremely important. All
right, I need to thank you so much, Dr. Muda Yusuf, Chief Executive Officer, Center for the Promotion of Private Enterprise, and Dr. Bamford, Josh Bamford from Anderson. Thank you so much for your time and sharing your perspective.
Thank you for having me.
Thank you.
Yeah, so that's it. It's a 100 basis points hike from the MPC, the first one for the year. Will 2023 be another year of hikes? Watch this space. We'll certainly bring all of that to you. And trust us here on Channels Television. We're going to each day after today dissect some of those issues that the central bank governor brought up top on that list. I do know the stamp duty is going to make the headlines tomorrow. But that's where we draw the curtains on this special edition of Business Incorporated. We brought to you the MPC decision for the month of January. I'm Ini John Mekwado. Enjoy the rest of your day.